Oh, ladies and gentlemen, Happy New Year to everyone. I know I've been a little bit distant from you, and I got to apologize to you. It's not out of any sort of hatred. It's really out of love. No, I've been extremely busy, obviously, with work. No doubt, working in any sort of retail environment. This is the busiest time of the year, so I haven't had much time to make videos necessarily, but we're back. Start of the new year. We're fresh. We have a little bit more time, and we're going to start it with a banger for you. What stocks to buy for the year of 2021? That's right, the whole year. New year, new stocks to buy. There's plenty of good stuff out there, and we just got to find it. So I'm going to show you 5 stocks today. 5 stocks that I think are going to be outperforming the market in terms of their performance here in 2021. And again, I'm excited for a good year, but we'll go right into this, and I hope you enjoy and you're ready to see some new content. We'll be rocking it out pretty consistently from here, so let's go for it. And number one, you see pictured, how could I say no? What? I've never once used these little buttons on my special mouse here. One of them goes back, and then the other goes forward. That's sweet, dude. Cool mouse, man. But I wasn't clicking the back and forth there. I know I don't show my cursor, but still, I promise you I wasn't. Apple stock is going to be this one. So obviously this year underwent a stock split and has gone up massively. I mean, we're not going to deny the massiveness of the stock gain. Year to date, the stock is up 79%, which is quite a bit. And the stock has been a consistently good performer over the last 5 years. But I still think there's plenty of upside for the stock, and there's many reasons for it. So, if you don't know Apple, obviously, I think you should, first off. But Apple is a massive company. They do a lot, for sure. They're not just iPhones. That's one thing that people need to realize is iPhone's still the biggest part of their business. You need to consider it. But within the next couple of years, it will not be the biggest part of their business. But it's still a major point. So obviously for them, obviously Apple has Mac. They've got iPad, iPhone, Apple Watch. They're the leader in terms of wearables in the Apple Watch. Apple TV, which gives us into that big subscription sector. Their service sector is going to be the biggest for them here in the future. Services are taking over very quickly, and it's going to keep going, obviously, with services like Apple TV, Apple Music, Apple Fitness now. They're getting in every sector, and that's what I really like about Apple is the diversity with this company. They're involved with every single sector you could imagine, and in the popular ones. I mean, we're talking about the forefront of technology. It's Apple. One thing I really like that's happening this year, not only booming services growth, because it will be, but I also really enjoy the fact that they have released 5G iPhone. 5G iPhone is going to be really massive. Obviously, the iPhone 11 was a really big release for them. It really was. They performed very well. But the iPhone 12, 5G is going to be pretty dang big. Obviously, as 5G is rolling out with everyone, once people realize the importance of 5G and how much better their service could be, people are going to switch to these 5G capable phones for the service of 5G. Obviously, that's not necessarily them making the best phone for it. People are just going to want that 5G. And they'll make the upgrade early, in my opinion. They won't wait the full 2 years to get a new phone. They'll go with the new phone now because they want that 5G capability. So 5G is going to be really big for Apple. They're going to perform really well in terms of this cycle of iPhones, in my opinion. But again, I do think services are going to be booming regardless. One other thing you have to mention is the potential here. Not saying this is exciting to me necessarily, but there's talks of Apple getting into the electric vehicle game. Not sure what that looks like, but obviously they've had history of talking about it. So we'll see. Not saying I necessarily like that. Obviously it's a very expensive thing too, but it's worth mentioning. It could be a pretty important thing in the future. If you look at the data on this stock, obviously the highest valued company out there in terms of A company's $2.24 trillion market cap is incredible. A PE right now of 40 and a forward PE of 33 does seem pretty steep, and it is for the history of this stock. But I think there's reasons why it has earned that justification. And a lot of it stems really from the fact that they just rock. I mean, in everything they do, Apple's such a solid company. And I think services growth is really what warrants them at higher PE ratio, in my opinion. I think they deserve to trade at a premium to the market because of their performance. So the financials, or the valuation isn't the best on this company. You have to be honest. It's not the most beautiful thing you could imagine, but revenue has seen, obviously, growth. This last year saw good growth after a year of decline. Pretty good to see. The company's doing well just overall in terms of what it's doing. Even through a pandemic, they're performing well. So I think that's worth mentioning as well. Overall, there's a lot of good stuff about the stock. I can't lie to you. There's a lot of good stuff. On top of that, we've got a good dividend. I mean, they pay a dividend consistently. They've grown it 9 years now. It's only a 0.6% yield. Not crazy, but it is worth having when you hold the stock. It's nice. It's nice to have. So with all of these things combined, I think obviously my main argument is going to be the 5G iPhone and services. It's going to be big for this company, and it's going to make investors flock to this stock, especially if we see uncertainty in this next year. People will flock to the stock they know, and that's going to be Apple. So I think they'll gain some benefit from that. So that's Apple for you. After them, some people might not be shocked about this. Yeah, that's right. Disney is my next stock here. Disney is fantastic for a lot of reasons. You know, you've heard me talk about this a while. Not only is it one I've been selling you for quite a bit, this one I'm like, come on now. It's still worth a buy. This thing's been performing super well. Saw a massive dip earlier in the year where it saw a dip of, more than 40%. Still only up 21% year to date though. And it's recovered from that dip quite well. But I still think there's a lot more that needs to be said about this company. Over the past 5 years, actually not a whole lot of performance prior to 2019, and then it started taking off quite a bit. So I think there's a lot of room for this. If you don't know Disney, well, there's a lot to Disney. Obviously, parks and travel, really big stuff in Walt Disney Resort, Disneyland, Disney Cruises, all of that, which has been completely shut down this entire year, not accessible. It's been a major segment of their revenue shut down, which is why the stock has been a little bit behind. But with vaccines coming out, I'm really hopeful for some good recovery in 2021. Not a full recovery, but it's going to start recovering, and I think that'll get people quite excited. We have movies, obviously, leading in terms of media platforms with just everything they own, and obviously various merchandise. And the key for me is going to be Disney Plus. That's right. Disney Plus is quite incredible because they have finally done it. I'm excited for it. They're spending time and working on originals. That's what I've been arguing for a while, is that they need to spend time and work on originals because Disney Plus, let's be frank, it's the future of this company. It's the future of this company. Right now, it is the largest moneymaker, and it's going to continue to be over the next few years, even after the recovery of parks and recreation. So originals, a lot of originals as we go through this, and you can see plenty of originals going on here, and even some more, as you might be able to tell by looking at, that's right, the huge announcement that they released on their investor day, which got a lot of people excited, which really skyrocketed the stock. And I think this announcement was super exciting. They announced a lot of new originals that are going to be over the next couple of years. You've got Ahsoka, Rangers of the New Republic, a lot of Star Wars originals here, Andor, Obi-Wan Kenobi, we were all awaiting that, The Bad Batch, which is obviously following Clones. Pretty exciting. Star Wars Visions. Lando, following Lando Calrissian. You gotta like it. The Acolyte, A Droid Story, Willow. I mean, come on now. From the Marvel segment, you've got WandaVision, Falcon and the Winter Soldier, Loki. People are excited about that. What If? Miss Marvel. Hawkeye's getting a TV show. That's freaking right. She-Hulk, Moon Knight, Secret Invasion, Ironheart, Armor Wars, Guardians of the Galaxy Holiday Special. That's pretty cool. And I Am Groot with an original series of shorts. Pixar. I mean, you got Soul, which is pretty exciting for a lot of people. Burrow. Pixar Popcorn. Doug Days. Cars. That's right, a series of Cars. Can you imagine it? Win or lose. Disney. Hocus Pocus 2. That's right. Look at all this. It's so much greatness. And that's what really excites me about this company. So, obviously, Mandalorian, very big success. And this is really a place, this is a company that spends a lot of money on their originals. The Mandalorian was the budget. Each episode was higher budget than a lot of movies that are released. We're talking $200 million per episode in terms of cost for an hour of content. That's a lot more than a lot of majority of movies really cost. So you need to consider that. So these originals are going to be quality ones, and it's going to drive subscribers out. It's going to just drive them here. Most recently, they announced that they hit 82 million subscribers as of their announcement in the Investor Day early December. If you might remember, their original expectation for subscribers was going to be 100 million by 2024. They're already at that in 2020. They're going to hit that goal. They just upped that estimate now to 230 to 260 by 2024. I think they will still smash that. I think it'll absolutely smash, regardless. Disney Plus is going to have more than 230 to 260 by 2024. I just think it'll be closer to 30 million or 300 million. I really do think it will. So that's really exciting stuff. And the fact that they've already surpassed their 2024 goals in 2020, I think shows you what this company can do. And on top of that, obviously owning Hulu and ESPN Plus, which are growing even further as well. Really important stuff. Hulu's massive because you think about the ditch of cable. People are ditching cable. Hulu Live is a decent option if you're ditching cable. Cable's been screwing a lot of people. Hulu Live is an easier option because not only does it have streaming content, but it has live TV. So there's a lot going on here that benefits Disney, and I'm pretty happy for them. Valuation on the stock isn't that cheap, I can't lie, but it is in terms of, in my opinion, the market cap on this company, trading at 308 million with a revenue right now 75. I think overall, really only trading at a 5 times multiple in that aspect is relatively cheap for a company that is showing massive growth. And when I say massive growth, I just want to show you this because it's really important to say. Again, we've seen shut down entirely in their parks and recreation sector, which this year they went ahead and put up some good numbers, right? Really cool stuff. Their direct-to-consumer and international, which is obviously their streaming segment, this year put up an 81% increase year over year, $17 million. Their Parks and Rec put up less than that. Now, you need to mention last year their parks and experiences put up $26 million. So that's a $10 million decline in terms of that segment. When you see that recover, that's $10 million extra dollars. They're already up overall. Total revenues only declined by around $4 million. Add an extra $10 million out of that when you see recovery in the parks and experiences segment. Oh my gosh, are you kidding me? That just means this company is going to keep going off, and this direct-to-consumer is going to keep growing. So that's Disney stock for you. It's exciting stuff. So next stock is going to be a pretty good one here for you. It's going to be, that's right, the Ford stock. Not super exciting for a lot of people, but it's on here for many reasons. I think the 2021 suite is quite exciting. Yeah, I mean that's my opinion. I'm pretty excited about 2021 and really the future of this stock, and I think it'll finally catch up. Year to date, I can't lie when I tell you it's been a stinker. I mean, this has been a stinker of a stock. Still down 6% on the year. I think it's deserved a little bit more than that. I think it's deserved more performance, and it's been crapped on quite a bit. Auto industry is finally recovering, and that's why you've seen some recovery in the stock in the last 6 months. Quite a good recovery, and Ford with it obviously recovering too. There's a lot of ground to make up. If you don't know Ford, some of their vehicles, first off, for their Ford F-150, obviously the number one selling truck, but some of their vehicles, the Escape, EcoSport, the Bronco Sport, which again is a huge winner for me, the 2020 Edge, Explorer, Expedition, the Ranger Transit, F-150, that's right, the Super Duty, the Transit, the Fusion, the Mustang, Fusion High, and for electrics, they've got hybrids right now on the market, no pure electrics quite yet, and commercials, the 2020 Transit is pretty exciting as well. And performance vehicles, not necessarily your vehicles for normal driving, but what excites me too is going to be future vehicles. The 2021 Bronco is really, for me, one of the most exciting models they've talked about for a lot of reasons. It's a really cool classic look with a modern design. It's really exciting, and I think a lot of people will be purchasing that. You've got the Ranger Tremor, the Ford F-150 Tremor, and the Mustang Mach-1. I think one of the biggest announcements too is going to be the Mach-E, Ford Mustang Mach-E, the SUV Mustang, which is all electric. Pretty exciting, and I think overall sales are going to be really good on this, as it's the first electric vehicle. And I mentioned Ford stock because of the really electrification of this stock. As we get more electric vehicles, people will buy into it quite more. So that's why I like this one. That is definitely why I like this one. Valuation is cheap on this one. Ford PE of 8.28, cheap. Price to expected growth of 0.42, and price to sales of 0.27. They're trading the stock at dirt levels. I mean, it's dirt cheap. Market cap's $35 billion, yet this company brings in $130 million in revenue. I mean, it's trading at $35 million. What's going on here? Is anyone else seeing what's wrong here? I mean, shoot. It's just dirt cheap. $130 billion in revenue with a market cap of $35 billion. Am I the only one that thinks that's insane? We're talking about 1/4 the multiple there, 1/4. Yeah, it's just not something that I don't see how that's viable. So again, dirt cheap valuations why I like it, and I do think they'll reinstate the dividend this year as well. So keep that in mind. My next stock is Walmart. Walmart, pretty exciting with that as well. And why do I mention Walmart? It's a boring stock, right? Traditionally a pretty boring stock that just follows the market. I think there's a lot going on with this stock, and you've seen it this year, really, in terms of performance. It's pretty exciting. Obviously, my biggest position, but the stock's up 21%, which is a good year for it. Really good year for it. And I think there's even more performance up in the year ahead. If you don't know Walmart, obviously they sell like everything, everything under the sun. But not my main thesis. It's not going to be what the heck they sell. I mean, that's not my main thesis. My main thesis here is going to be the addition of Walmart Plus. Walmart Plus has a lot of benefits. Newly announced as of September. Really cool. So what you get with Walmart Plus, it's pretty much the rival to Amazon Prime. You get free shipping. next day or 2-day shipping with no minimum order. Pretty nice. Free delivery of groceries that can be really delivered into your house, even potentially. Pretty cool. Pricing save on fuel, and also the access of the Scan and Go app, which is really exciting because you can skip lines, and most Walmarts are set up pretty well where they have a lot of self-checkouts, which helps. Belted registers are terrible. If you're going to a normal manned register, you've made a mistake in life. But Scan and Go allows you to shop in store on your phone and go get it checked at the exit. Very simple process. Super simple. It's nice. And I think it's going to really add a lot of people coming to this app just for the convenience of this and the fact that it's a no contact service, or minimal contact at least. So pretty exciting. Now, we do have people, estimates saying that as of even mid-November, that roughly, didn't mean to highlight everything, roughly 17% of U.S. consumers have signed onto Walmart Plus since the September launch. Meanwhile, 68% have signed on with Amazon Prime since its February 2005 launch. And I'm not going to say it's going to reach Amazon Prime numbers right away, but the customer base for Walmart is everyone. I mean, it's everyone. Everyone shops at Walmart. You can't deny it. Regardless, we've all shopped at Walmart. And we all know what Walmart is. The name recognition is off the chart. Valuation-wise, really not that expensive. PE right now sitting at 21, 25 forward PE. Price to sales at 0.75 is pretty cheap. You're talking about a market cap of $410 billion. Yet the company brings in $548 billion in terms of revenue. That's the cheap market cap. This stock is still trading cheap even after a pretty good year this year. And I think it's only going to grow. And you've seen historically, this has been the best year it's had, obviously, period, but in a while. Last year putting up $523 million in the trailing 12 months as of January. This year putting up $548 billion. I mean, shoot, it was growing not even by $10 billion a year for the most part. Now it's showing a $25 billion growth, which is really good. It's really good growth, especially at these levels. And I'm not saying it's necessarily going to continue at that pace, but there's a lot of pluses for this company. And obviously the leader in terms of online e-commerce while being a physical, brick and mortar store, it's Walmart. Name recognition, Walmart. They've got everything going for them. And I think Walmart Plus is going to add a lot of revenue to them, which is going to be big. It's going to be big stuff. They're going to be having a lot of subscribers. They haven't announced any data yet since their September launch, but I think they will, and people will start buying this stock. My last stock is the SPEC stock, which I think has a good chance this year. It's going to be New Age. Obviously, it used to be New Age Beverages. No longer New Age Beverages because of a joint partnership now with 5 other companies, to where they're a lot more than just drinks now. They do a lot of products now, which is pretty exciting. So why New Age Beverages? Well, there's many reasons for it. If you don't know New Age, some of the products they carry: Nestea, probably one of the more known ones; Enhanced, Hero Rapid Fuel, Tahitian Noni Shape, and Timana, which is their beauty segment now, a company they partnered with. But a lot of products really carried by this company. There's a lot of products. And obviously their main one originally was going to be just the beverage segment, which, had some work to do. They had some work to do there. But they've done a good job with this partnership with 5 other companies, in my opinion, because it broadens their horizon, and the main thing they needed to learn is diversification. And now they're getting out of more than just the drink segment by adding beauty products. So really exciting stuff, and I think they're going to see some growth with their beverage brands. Right now, trading a market cap of $324 million, forward P of 28, and a price to sales of 0.98. Pretty cheap valuation. Total revenue sitting at $248, trailing 12 month. But again, I think this is the year they kind of break out with the inclusion of the other companies' revenue. I think this is the year they see some pretty big growth, and I think they kind of start forwarding onto here. Not saying it's going to take off necessarily, but I do think this should be a good year for the stock, even at the levels that it's at. I bought a decent chunk of it when it was, trading pretty low. I mean, year to date, pretty decently, up 53%. Was it near, it sank near $1 earlier this year. 52-week low of 98 cents. I mean, shoot, it sank low. And a 52-week high of 349, trading somewhat close to its 52-week high, but I think there's much room to grow. And this stock again can return to levels where it's over $5 easily, and I think go beyond there. Potentially signing partnerships with bigger and better too. Beyond there. That's what I'm excited about is the potential there. That's what I got for you today. 2020 is going to be a great year for us, and I hope you enjoyed it. You have a great day.